Do you want to hear the most asinine thing I've seen in a long time for Tesla stock? Bank of America has raised its Tesla price target to $490 from $400, but lowered its rating to neutral from buy. That makes zero sense at all. They say, quote, execution risk is high and Tesla is trading at a level that captures much of our base case long-term potential for core autos, robotaxi, Optimus, and energy generation and storage. They clearly do not understand what Tesla is doing long-term with robotaxi and Optimus. This is not even a fraction of what the long-term valuation could look like with Tesla for these two businesses. And I think this next clip really just shows how far behind the curve Bank of America is, and really most of Wall Street. Jensen Huang, NVIDIA's CEO, says autonomous vehicle revolution has arrived. He says that Tesla's success proves it. Take a listen to this 2-minute clip.
The AV revolution has arrived. After so many years with Waymo's success and Tesla's success, it is very, very clear autonomous vehicles has finally arrived. Well, our offering to this industry is the 3 computers, the training systems to train the AIs, the simulation systems, and the synthetic data generation systems, Omniverse and now Cosmos, and also the computer that's inside the car. Each car company might work with us in a different way, use 1 or 2 or 3 of the computers. We're working with just about every major car company around the world. Waymo and Zoox and Tesla, of course, in their data center. BYD, the largest EV company in the world. JLR's got a really cool car coming. Mercedes has a fleet of cars coming with NVIDIA starting this year, going to production. And I'm super, super pleased to announce that today, Toyota and NVIDIA are going to partner together to create their next generation AVs. Just so many cool companies. Lucid and Rivian and Xiaomi and of course Volvo, just so many different companies. Wabi is building self-driving trucks. Aurora, we announced this week also that Aurora is going to use NVIDIA to build self-driving trucks. Autonomous, 100 million cars built each year, a billion vehicles on the road all over the world, 1 trillion miles that are driven around the world each year. That's all going to be either highly autonomous or, fully autonomous coming up. And so this is going to be a very large industry. I predict that this will likely be the first multi-trillion-dollar robotics industry. This business for us, notice in just a few of these cars that are starting to ramp into the world, our business is already $4 billion, and this year probably on a run rate about $5 billion. So really significant business already. This is going to be very.
Jensen Huang says autonomous vehicles could be the first multi-trillion-dollar a year business. And Bank of America says that Tesla's has execution risk because it's pricing in pretty much all of Bank of America's base case for robotics and Optimus long term. That just feels like an asinine attack on Tesla stock. And that is a big reason why Tesla is down 4% today. Now, there's other news as well that you should also know. Jolt's job openings exceed expectations, coming in at 8.098 million versus expectations of 7.7 million. So the labor market does not appear to be as weak as some people thought. But the ISM services PMIs are really the dagger today for our markets. Headline number comes in at 54.1. The expectation was 53.3. So you beat on that headline number. And certain components did better than others. ISM services business activity came in at 58.2. Expectation was 54.1, so that beat nicely. Employment came in at 51.4, matching expectations of 51.4. New orders came in at 54.2, meeting expectations at 54.2. But ISM services prices soared. So the inflation component of the services report came in really high at 64.4. This is the first time this component has been above 60 since January of 2024. So over a year now. The expectation was 57.5. Now this article from CNBC says services index shows big jump in prices for December as companies fear tariffs. 10-year treasury yields are up 7 basis points today to 4.687%, which is the highest we have seen getting back to April of 2024 levels. So yeah, that's kind of an issue at this point. The only time we were higher than that in recent history was in late 2023 when 10-year treasury yields hit almost 5%. And Donald Trump said today in live remarks that interest rates are far too high. So suggesting maybe we're going to get more cuts, but Wall Street really doesn't like that when we're getting higher inflation data at the same time. We also had Fitch Ratings today that came out with a new note on the U.S. They say, quote, the U.S. faces significant fiscal policy challenges in 2025 related to the debt limit, appropriations, and tax cuts in the context of already large deficits and an increasing debt burden. We believe it is unlikely that these will be resolved expeditiously because of long-standing weakness in the federal government's budgetary process and a narrow Republican House party. So all of these things seem to be broader market issues today that are pushing markets lower. Take a look at the headline indexes here. S&P 500 is down 0.68%. NASDAQ is down almost 1.5%. The Russell 2000 is down almost 1%. And look at the VIX over here, up 9.2% today. So yeah, there's definitely a deterioration in markets taking place today. And when you look at other big tech names, Nvidia is down 5% today, literally erasing all of yesterday's gain. Microsoft down 1%, Amazon down 2%, Meta down 2%, Apple down almost 1%, Netflix down about 0.5%. Google is actually the only big tech name that is barely in the green. So when I think about this context compared to Tesla that's down 3.94%, it doesn't sound all too bad considering what other big tech names are doing. Tesla tends to have like a 2-to-1 beta. So Tesla tends to really do good on good days and bad on bad days. This is kind of in line with what we would expect to see when Nvidia is down 5% and Amazon's down 5% and, you know, all of your other big tech stocks are weak. In other news today for Tesla, the NHTSA said today it has opened a probe into 2.6 million Tesla vehicles in the US over reports of crashes involving a feature that allows users to move their cars remotely. The feature is actually Smart Summon, and the NHTSA got over reports of 4 crashes involving Tesla vehicles. Quote, the vehicles failed to detect post or parked vehicles when they were operating on actually Smart Summon. NHTSA said, adding it had users report that they, quote, had too little reaction time to avoid a crash, either with the available lines of sight or releasing the phone at button, which stops the vehicle's movement. Tesla has delivered over 20,000 vehicles in Belgium in 2024. This is according to a post from Tesla Europe and Middle East X account. Also in the news today, automakers are facing a tougher European Union in 2025 for emissions rules. They are planning to buy carbon credits from electric vehicle makers, including Tesla and Polestar, to avoid hefty fines, an EU filing showed on Tuesday. The move could save them hundreds of millions of euros in penalties. Tesla has asked the court in Sweden to ensure that the country's transport agency provides access to license plates that are currently blocked by postal workers in a wider labor conflict, a court official said on Tuesday. Also, not really helping Tesla today, 5,500 new Teslas were insured in China last week. So not a super great number, but not too uncommon to start a new year regardless. And again, NVIDIA CEO Jensen Huang said about robotaxis and self-driving, quote, "I predict that this is going to be the first multi-trillion-dollar robotics industry." For NVIDIA CEO Jensen Huang, that, Wall Street hangs on to every word he says. It seems like nobody paid attention to that bombshell comment there. I mean, that was a crazy comment. And Tesla stands to by far benefit the most. NVIDIA last night also showed how its new Cosmos system uses cars to generate synthetic real-world driving scenarios to train self-driving cars. It can create drivable 3D environments. Driving scenarios variations can be generated from replayed drive logs or AI traffic generators. Next, a neural reconstruction engine uses autonomous vehicle sensor logs to create high-fidelity 3D simulation environments. It replays previous drives in 3D and generates scenario variations to amplify training data. NVIDIA's AI data factory scales hundreds of drives into billions of effective miles. Sawyer Merritt says, opinion: "This seems like it's aimed at legacy automakers that have virtually zero real-world video self-driving data collection. They are years behind Tesla and have no real shot at catching up. So in theory, this synthetic data approach solves their lack of real-world data, right? Not exactly. Real-world video driving data is far superior. Tesla has 7.1 million vehicles on roads worldwide, collectively driving upwards of 75 billion miles annually. Each vehicle is equipped with multiple cameras, adding up to a total of more than 56 million cameras that Tesla is capable of actively capturing real-world video driving data from. Billions of miles are now driven on FSD every year and growing. Synthetic driving data is like using ChatGPT. You might trust what you see is true, but you often can't be entirely certain without further validation. In contrast, real-world video driving data is reliable and represents true, legitimate scenarios as they occurred. It's the superior method for solving self-driving as long as you have enough video data collection." Share that with you because Elon Musk confirms that that is correct. And this even dates back to what Elon Musk said April 14th of 2024. He says 2 sources of data scale indefinitely: synthetic data, which has an, quote, "is it true" problem, and real-world video, which does not. NVIDIA also introduced its next-generation processor for cars called Thor Blackwell. It has 20x the processing capability of NVIDIA's latest generation chip. It can also go into humanoid robots. Volkswagen EVs will get Tesla supercharger access in March of 2025. Now, option activity for Tesla stock today is on the lighter side, at least so far. You have 81 different trades totaling $43.76 million with a positive order value of 44%. Take a look at this trade here, though. With an expiration of May 16th, a $750 call worth $141,000. There is some people taking this opportunity in the recent drop in Tesla to buy some of those option positions that they're bullish on, maybe at a cheaper price. So it always depends how you look at scenarios. You may look at Tesla stock falling from almost $490 down to where it is today at $395, and you might say, oh, that sucks. There's nothing I can do. Or somebody else might say, that is an opportunity. And it does look like Tesla short sellers today are adding to their positions at least modestly. About 366,000 shares today are being sold short. You have 2.88% short interest of free float, $33.1 billion sold short in Tesla, totaling still about 80.5 million shares currently sold short. Sentiment for Tesla today surprisingly is bullish at 58. 1 week ago or yesterday, you were bullish at 71. So you've fallen a little bit today, but still bullish, which is surprising considering the stock is down over 4%. Message volume is normal at 53, and participation ratio is high at 55. Tesla is now running 4,000 ads globally. The percent of stocks trading above their 50-day moving average back down to 36.89%. So again, Guys, this is an opportunity. Okay, I will explain the extent of this opportunity in the next video. It needs to be pounded home within your minds. This could be one of the biggest opportunities we have seen in a long time. And I don't think too many people are actually understanding that. Whenever markets are this bearish, you want to go out and buy as much as you possibly can. You can also see that in the CNN Fear and Greed Index over here. I think it's not correct as of right now. I think we'll have to get a more updated number. It's coming in at 38 today, which, yes, is still in fear, but yesterday's close was at 36. And again, the Nasdaq's down 1.5%. The VIX is up 10% today. Your other indexes are down almost 1%. It definitely seems like there is more fear today than there was yesterday. What's actually interesting about today, though, is the RSP, which is the equal weight S&P, is actually slightly in the green today, up 0.16%. So that's a big difference compared to the SPY, which is down 0.7% today. The average stock in the S&P collectively put together is actually green, which is a pretty good sign. So yeah, big tech is dragging down the indexes more than the average stock is, which again is a good sign. The RSP fell 8% from peak to trough, and as I've kind of explained in different videos, there is some headline risk to the S&P because of big tech in January. I mean, do you really want to allocate new monies to big tech in 2025? Probably not. You probably want to go into small caps, industrials, cyclicals, blah, 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 the areas that I've talked about relentlessly here on this channel, something like even a Tesla, right? You might want to get out of Nvidia or Apple or Google or Amazon. This might be one of those opportunities to take a profit in those areas. And as you see today, people are doing that. They're taking profits in those areas, and it is pushing down the headline S&P. The RSP, not so much. So that is going to do it for this video. We have a lot more to cover in the next video coming out at 8 p.m. Eastern Standard Time tonight. So get ready for that one. Ladies and gentlemen, enjoy the rest of your day, and I will see you in the next one.